45 days and send them on their way and be on to the next and stay in contact. So I've been working with Elio now for what, 2 months now?
Give or take.
We're also one of the sponsors for 614 Podcast, one of the sponsors for the meetings event. And Elio was gracious enough to give me a platform to come in and discuss SBA lending and how it can help advance, grow, start.
For the stream.
Oh,
We're streaming it live all over the world.
are we streaming now?
Yes, sir.
Okay. Well, you didn't tell me that. Sweet.
No pressure.
No, I'm good. As long as you guys participate, this will go great. So, completely threw me off track of what we were saying.
It's okay. It's okay.
Yeah, so Elio gave me the platform to come in and speak about the SBA and how we're really seeing it push and motivate people like yourself and those who are looking to either start a business or buy a business, or who already are business owners and are looking to expand or bring in different aspects of their business, and how they can use the SBA to do so. And so I sent the PowerPoint over to Elio, really just to kind of, allow him to see some information that I may cover, but really want to make this more of an interactive conversation, just to, talk about some of the different things that you're hearing, seeing, whether it be for your customers or the people that you work with, or for yourselves, if you are looking to get into entrepreneurship. So that's kind of where things are. That's how we're going to kick it off. Again, I did not put together this wonderful PowerPoint presentation. It was put together by our very own Lindsay Koss, who is the team leader for all of SBA, and she's located in Pennsylvania. And she takes us around, and she goes around all over and kind of visits different markets and gives this presentation. So it's got some great information in there. It talks about our new SOP, standard operations process, procedures, and some of the other things that we're looking to do. And basically, where the SBA is today, after all the SOP changes that have been made, is we're in a space of what they're considering and calling it "do what you do." So they're telling SBA lenders out there to do what you do. And basically, what that means is that in the past, you had conventional financing, you had SBA financing, you had startup, micro loans, things of that nature. And what they're saying to the SBA is like, hey, if a bank is willing to do this on the conventional side, if they're willing to do this on the micro side, if they're willing to do this for startups or for seasoned business owners, we'll do the same thing SBA. Let's just make it make sense, right? So they're giving us a lot of ability to work outside of the lines. A lot of times you go into a bank and they have a box, they have a certain credit box, they have a certain lending box that they want to place you in. But the SBA is such a phenomenal product that allows you to throw that box out of the way and kind of draw your own lines. And as long as we can tell the story, and as long as we can put together a product for you that makes sense, that we can present to underwriting, we're seeing a lot of loans and a lot of new businesses come to life from this new SOP version of the SBA. SOP, standard operating. Yep.
And Keith, I'm happy to drive for you, so just let me know if you want me to move through.
Yeah, I mean, you can go ahead and click through. So benefits, SBA benefits for borrowers, extended terms, maximizing cash flow. Basically what that means is that most of all the SBA loans we do that are for just your regular business needs are 10-year terms. If you're going to be looking to acquire commercial real estate, you're looking at 25-year terms. And so a lot of times, depending upon what all your deal may inquire, so you're saying, hey, Keith, I want to come and I'm going to buy this business, like kind of like the vet practice I was telling about you earlier. Come to me and they say, hey, Keith, we're going to buy this vet practice. And then also we're going to buy the commercial real estate as well. We want to put that on one loan instead of having two separate loans. What we can do is a blended term at that point, and depending upon which one costs more or which one's going to be more, that term could push higher towards that 25-year term, which is going to elongate and make that cash flow a lot better for our clients. So again, this PowerPoint, it has a ton of great information in there. Financing is projected income and cash flow, lower down payments. the SBA required for a long time that you had to inject your own personal cash to get deals done. That no longer is the case. We're now doing pretty much 100% financing, because if you're purchasing a business, if the seller is willing to participate, and a lot of times if you're buying a business that's a new business or it's new to you, you're not really familiar with how that business operates, but it works and it's got great cash flow. And you're like, hey, I want to be an entrepreneur. I want to own this business. That seller is going to stay on. So if that seller is willing to participate, meaning they're willing to hold that note, that counts as your 10% cash injection. And now you come to this deal with no money out of pocket. Okay, so those are some of the amazing features that we're seeing right now. I want to give you guys a chance to ask any questions that you might have as we're going through, because like I said, I want to try to keep this as interactive as possible instead of me just sitting here lecturing to you all.
I'm gonna ask a bunch of questions.
There you go.
All right, so conventional loan, SBA loan, why do SBA loans exist? And what does the SBA guarantee mean for the borrower and for the lender?
So the reason why SBA loans exist is because typically whenever you're looking at a conventional loan, a lot of times you'll have what we call collateral shortfall. So there is no collateral. So say you are a tech company and you're looking to grow your tech business. So you need to hire engineers, you need to hire salespeople, you need to, you need computers and things of that nature. But the loan that you need to do so is $1.2, $1.3 million. Well, not too many computers are worth $1.2, $1.3 million or anything else that you have in that office. So you have a collateral shortfall there. So what the SBA does is they provide a guarantee that says, hey, tells the bank, I got your back. If anything happens with this deal coming down the road where it's not going to work or something goes down, we're going to back it by 75%. Okay, so we'll back it. So $1 million loan, we got you covered on $750,000 of that. Okay, and then you're taking on the risk of the additional $250,000. So if you're looking at it from that perspective, a lot that allows banks to be a little more lenient and more aggressive in lending, because they do know that they have this guarantee behind them. On a conventional standpoint, I mean, that conventional loan it's going to have some different features, it's going to have some different structures to it, but it's not going to have that guarantee. So the bank is taking on that full brunt of that $1 million loan. That's their risk. And so the cash flow numbers need to be a lot stronger, tighter. The collateral definitely needs to be there for that loan. The borrowers typically have to have a little more experience in what it is they're doing. You don't see many, if at all, any startups on the conventional side. And so the SBA allows for startups to work, because when you have a startup loan, you're basing that off of projected revenue. And so if you're going to be lending into projected revenue, you want to make sure that you have that guarantee on the backside of that.
Okay, thank you. Did that help, that perspective that, banks are notoriously conservative? They want to get paid back. If you're not going to pay them back in cash, they want some property from you.
Yeah.
What I'm hearing is that the SBA is saying, well, not everybody has collateral. Not everybody has a rich uncle. Not everybody starts from the front of the line. So we want to come in and help the banks not necessarily take risks, but probably be able to lend to more people with the SBA guarantee. Now, that doesn't get us off the hook as the borrower. This is more of a bank guarantee. So what are, so one of the reasons why this is probably not as full as if I said, this is a talk about 5 ways to raise venture capital, is people think you're playing with house money.
Right.
Like venture capital, I don't have to pay it back. The business can go defunct and it's venture capital. What do I care?
Yeah.
Let's talk about, kind of the responsibility of the borrower in this case, because even with the guarantee, that protects the bank. What does the borrower really need to consider? Yeah,
the borrower is still on the hook for the full note. It still requires a full personal guarantee, unlimited guarantee. A lot of times it does require additional collateral from that borrower if they have more than 20 to 25% equity in a primary residence or in rental properties or things of that nature. The loan wants to be collateralized as much as possible. And, a lot of times, just having the signature of the guarantor can be sufficient and strong enough if that guarantor is really, really strong on their own personal balance sheet. But a lot of times that's not the case, especially when you're either starting up a business or the business is young and you're just looking to grow it. So the borrower is very much very still on the hook for everything that we're doing. But anything that you have in life, you've signed your name. I see some wedding rings out there. You guys are getting ready to sign on some different things. I know one of you said that your name will be changing here rather quickly. So, it's the same type of commitment when you're going into business. And so, if you truly believe in this business and you know that you want to see it succeed and things of that nature, you're willing to go and put your name on it and the responsibility of that as well. So, Elio, go ahead. Oh.
What are your minimum loans? Like, do you have minimums?
We don't necessarily have minimum loans. There's a threshold that I typically operate in myself, but I was telling a customer yesterday, and I was having a conversation about a client with my boss and with our director of credit. And I said I got into SBA financing because it allowed me to finance those who don't get the opportunity to get financing. Because when you walk into a bank, unless you know to ask for about SBA lending, some bankers may take the time to really dig into what it is that you need and say, hey, you know what? My SBA partner maybe would help you with this because it is a startup business, or you don't have a ton of collateral, or your personal financial statement isn't this strong, but you got great projections and you have a great business plan, right? So for me, I rarely turn down anything. I've done loans as small as $100,000 and as large as, $7-8 million. So it just depends on where that person is and what they need. But there's a product for everyone. So even if it's something that I can't do, I do have partners in-house that could, if you're like, I just need $25,000, I need $50,000. We have partners in-house that can help you and assist you with that as well. So.
And what's the transaction? Is it you give the cash to the customer, or they take it out on like a lien, or how does it?
Yeah, so it really depends on what type of loan you're taking out or what type of need you have. So a lot of times what you're taking out, if it's a term loan, and depending upon what it is, obviously if it's a business acquisition, that money's going to go straight to the seller or what have you. But if you need working capital, right? So a working capital loan or a line of credit, it's just like you're any other HELOC or anything to that extent. You can draw off of that and you pay interest on it from a line of credit perspective. But if you want a term loan and it's for working capital needs, it's very simple. When I explain to people that I've done these loans for, how simple it is, like, hey, here's a form that you're going to send me once we have this loan approved that says I need X amount of dollars for this. And you send me that form. I then have those funds deposited into your bank account, and then you use them, and all that happens same day. So it's a very seamless process when you're looking at a draw note from that perspective. Now, if you are leasing a space and that space requires for you to do a completely new fit out like this, like if it were just studs and no flooring or anything, and you want to do draws on that would come with the invoices from the builder or from your contractor or whoever's doing some of those things. So really just depends on the type of loan or the structure you're looking at.
Ideal industries, right? What are the ideal uses? I know you mentioned startups, and that's going to be very interesting for our community here, but
yeah,
what are the ideal uses, industries, scenarios for accessing SBA lending?
I think that's the great thing about SBA is that, again, there's no box, right? So if you can dream it and you can put together a business plan and your projections match it and you come through and it makes sense, right? And you're a strong enough borrower, a lot of times we're able to make those things happen. I mean, I've done loans for people that the things that they've come up with that I'm like, oh man, I wish I would have thought about it. Do you want a partner? Because it's just certain things so there really is no like true industry that we absolutely are like, we only want to do this or we only want to do that, right? It really just depends on what it is that you're interested in. Now, some industries are a lot riskier than others, your hotels and things of that nature, but we still do those. And I was reading a report the other day that hotels was the #1 financed industry in the first quarter for SBA loans. and it's one of the most risky ones because when they're strong and when they're good, they're big loans, right? And that report was done on a volume basis, but healthcare is another great space that we love. Daycares, the Goddards, the things of that nature in the world. Franchise banking, tropical smoothie cafes. I've got a couple of those in the portfolio right now. I'm working with another gentleman who has a contract to build 2 more here in Columbus on the tropical smoothie space. We've done Popeyes, we've done Little Caesars, we've done Wendy's, we've done whatever. We've done mom and pop restaurants. They just, hey, we want to do this. We want to do a Caribbean style restaurant. These are the numbers that we've been doing. We've been doing it out of a ghost kitchen, right? I just met with 3 gentlemen yesterday. They have a ghost kitchen that's doing crazy numbers. And they're like, hey, our ghost kitchen or our cloud kitchen, right? That you go online and you go into DoorDash or Grubhub and you order that food and you're like, well, where is this place? And it's in a building that you've never seen before. And they've got a kitchen back there that they're shipping food out for, right? And they came to me and say, hey, we want to open up 2 new locations, brick and mortar, one downtown and one out east. And I'm saying, okay, well, let's sit down, look at the numbers. Numbers for the cloud kitchen look phenomenal. They're strong borrowers. They're doing their thing. We'll probably be able to get that done pretty easily. And restaurants are pretty tough because, you can go to a restaurant tonight for dinner and in 6 months go back and they're closed. They're not there. And we saw a lot of that coming out of COVID. I think the number was something crazy for Ohio. It was like 1,100 restaurants or something like that closed in 2021 coming out of COVID. And I have to imagine that maybe some of those had SBA loans tied to them. But at that time, the SBA was guaranteeing loans up to 90% versus the 75%. So, banks still got paid whole on those for the most part. And I'm sure a lot of the borrowers took care of their part of it as well. So, yeah, I mean, there's no really space that we're saying we only want to do these 5 industries. At least I never say that. Some banks may say that. Some lenders may say that. That's not what I say. If your numbers work, if you got strong credit and you really believe in what you're doing and the business plan is there and it makes sense, let's go for it.
Can we workshop real quick, Keith? Because my man Cyrus over there is trying to do a movie.
Okay.
He needs $250,000.
Okay.
He already has the city or state tax credit. So like anybody, if you can explain that, let's workshop for him a little bit. Like, what would you like his deal to look like coming across your desk? So break down, give us the basis, and then Keith can give us some expertise.
Yeah, so we were awarded the Ohio Film Tax Credit, which is very hard to get. So
Okay.
Very appreciative. And so that's 30% tax credit of your budget. So we've got a total budget of $400,000. So we got an award letter saying we got $93,000 coming back to us, like guaranteed.
Mm-hmm.
So what the good producers like to do is, go to the bank and say, hey, can we get a $50,000 loan? Here's our proof that we got $93,000 coming back to you, and this can, be your guarantee for a loan. So a lot of banks don't really know about that. There's not many people get the tax credit, so it might be new introduction to banks. And so we're actually working with Freedom Equity right now, and they're trying to honor that as well. So it's just a maneuver to
Every frost is good people.
make a contract that goes directly to you if you got guaranteed money coming. Kind of like the SBA is kind of backing up.
Right. I think the thing that, first, congratulations on the grant. I mean, that's awesome, especially knowing that was probably really tough to get. So congratulations on that. I think the biggest thing that we have to look at when we're looking at this from an SBA perspective, right, is first thing is how do we get paid back, right? And so we can sit down and we can do what I call a back of the napkin cash flow analysis, saying, hey, this is what your cash flow number needs to be in order to pay back this amount of a loan. How are you going to get there on it for 10 years, right, to pay this loan for 10 years? And then if that works, plus you've got capital coming in. So basically you got your cash injection already of more than 10% because of the grant that you're going to be getting. as long as you have cash flow there. Now, from a collateral perspective, you start looking at that. But again, that's why the SBA is there to figure some of those things out. So I'm always a slow yes versus a fast no. And so if there's a way to back into a deal to get something done at any level, I'm more than willing to sit down and put the work in and do the work to make that happen. So if there's a chance if there's something that, if you got some business plan put together and your projections put together and things of that nature, be more than happy to take a look at it.
So here's your shot. Here's your pitch, man. If you get the money, how long is it going to take you to make the movie?
We're in pre-production right now, so about 2 to 3 months we should be shooting. It's a 25-day shoot, so that's a month right there. Then we'll be in post-production for about 3 months.
Mhm.
So this is looking like a, let's say, 6-month project here. Now we need distribution. And so that's when we're talking about distribution deals, but I'm a worst case scenario type person.
Mhm.
So what if I don't get a distribution deal? So we've networked with a bunch of theaters from Cincinnati, Columbus, and Cleveland. And I've had all my short films going to these theaters. So you got Drexel 35, you got Grandview Theater, you got Cinema, Pickering, or any type of Marcus Theater. You can rent that out. Woodward Theaters. We got about 10. So we got a distribution, circuit that I've created throughout the years, so that I can literally take my project and say, show it here for free or pay. Cinemark is another one. So if I don't get distribution, I will self-distribute through, the 3 C's on my own, and I might have to pay. So then I did the numbers on a $400,000 budget.
Mhm.
Like I'm on Shark Tank right now.
We're nicer.
Right. Absolutely. Absolutely.
So
There's no time like the present.
Yeah, so I like to do the break-even analysis, because I can walk around and say, like, this movie's going to make $1 million and do this. It's the next biggest thing. People don't believe it until they see it. So what is the break-even analysis to give them a realistic goal? So on a budget of $400,000, I need about close to 100,000 ticket sales. 100,000 ticket sales will get us to break even. There are 10 million people in Ohio alone. 10 million. I need $100,000 to break even. And that's just in the state of Ohio.
Yeah.
That is not saying what will happen throughout the country. And
We need 1% of the people in Columbus to buy a ticket.
There we go. And so our marketing team will get that together throughout our circuit that we built through the 3 C's. And yeah, this does not count foreign distribution, because we've already built up a platform, a social network, because the process is a global concept. This happens to people after America. My fans are from Indonesia, Malaysia.
Mm-hmm.
It's kind of like second world, third world countries, ethnic people that is really big. And so I've got that connection right there. So to break even, you get your money back. So the producers want, 120% back. I get that. The bank kind of just wants their money back with a little bit of interest. So, I'm in a spot if I do need to have a discussion, because let's say this is going to happen, which I think it will. I'd rather work with a bank than a producer standing like this and has a little bit of say-so where things go and input and creative control, just waiting like, when do I get my money back?
Yeah.
It should be within a year. That's when you should get your money back. But I would rather work with a bank, because it's not so like enforcing of the creative control of things.
There's a pitch, man. 100,000, 6 months in production, has a distribution channel. How much are you getting per ticket?
I rounded it down.
To what?
So $5.
$5 per ticket. How many movies, how many?
I got $5.
Sleep paralysis is something that a lot of us have experienced. It's a real thing. And there's a movie about that, acknowledging that it's a real thing. So there's a personal interest story there. So how many movies every year sell 100,000 tickets?
Well, I was looking at the movie theater numbers, and I'm not sure that question completely the full numbers, but I was looking at the top 10, and it was like the bottom 10 was like $3 million in 1 week. And of course, these like other movies like Superman, and they're making tens of millions of dollars. So just from that top 10, like if I get in the top 10, I'm making like $1 million plus, if just to be in the bottom of the box office. So that was my goal, is to be number one, but you know, it's hard to sell people when it's like, it's
Yeah.
But then you guys saw me on TV the other day, and now people were like, hey, he's a little bit serious, I think.
Yeah. I mean, I'd be more than happy to sit down and dig into the numbers with you and figure out if there's a way to make something work. Obviously, again, it's going to come back down to cash flow. It's going to come back down to how the loan gets paid on not just in a year, but on a monthly basis, right? And what's going to be put in place to be able to manage that. But like I said, the SBA allows us to color outside of the lines. It allows us to, dump a bunch of the sand outside the sandbox and build sand castles with that sand, right? Everything doesn't just fit into that one space. So let's sit down, let's have a conversation, look at some numbers and figure out if there's a way to get there. Even if that means, it may just be a longer process, but if there was someone here that was in marketing that could also help you position the film to that says that, hey, I know that it's going to be in these 5 theaters, and there's going to be in these 5 theaters for this 6 months, right? That's how we can back into a projected number. Because if it's in 5 theaters for 6 months at $5 a ticket, I can back into that number and figure out what that cash flow is for 6 months in order to make that loan payment, in order to present that to an underwriter, say, hey, this is what's going to make in the first 6 months because he's in 5 theaters. It's going to be there for 6 months. And each theater holds 240 people. So,
exactly.
Right?
The numbers we're doing, so it's probably wouldn't be 6 months because that's a long time. So it's a month to keep the numbers
Right.
simple,
Right.
Opening weekend, and then the real people talk.
Right.
If
Right.
they return next weekend.
Yeah. Yeah.
Really where the numbers speak, but then after that, it goes to video on demand, and it's outrageous out here of the options and all different type of deals. So after the film is in the theaters, then that's when we shift to video on demand, which is another way to bring in revenue. But yeah, we got the business plan, and we want to stay around under $1,000 a month on this loan, and that projected out over 5 to 10 years. We feel like we can make those numbers work.
Yeah. Okay.
Awesome
Great.
workshop, man. That's what I really want these events to be about. It's like taking real world businesses, talking to the experts, and trying to get you excited about talking to Keith. Because sometimes talking to a bank can be intimidating, depending on what your life experience has been. But one of the things I like about Keith is that Keith's mission is to do away with that, right? He wants to be like the community banker that you can go to and talk to. It doesn't have to meet these certain criteria. He's going to help you work your way through. So I hope you do go talk to Keith, because I need to see that movie, man.
I would love to. Oh yeah, I met Elio 10 years ago. What was called Tech Columbus. It's like Rev One now. So
Yeah.
I remember meeting him there. So he knows I've been on a journey, and so is he. But yeah, definitely would love to meet and at least sharpen up.
Right.
what I got with.
And I think that's the thing that separates some of the lenders at Northwest Bank, and how I try to separate myself from other lenders at your Huntington, at your Chase, at your, the other banks around the area, right? Like I said, if you talk to the majority of my clients, they'll tell you that most of their deals were not cookie cutter, like this, I put it in underwriting and boom, it was approved. We got it done. Or they came to me with this amazing plan and this happened and they got it done. A lot of the deals that we've worked through and the people that I've built long lasting relationships that still send me business today. I've been in this space for over 20 years now. And the people that still send me business are those who I've done deals with that every other bank said no, right? So one of the largest SBA deals that I did was for a company that was buying another company, and they had been to multiple different banks. They had gone to venture capitalists to see if they wanted to buy into it and do some different things, and everyone told them no. And we always tell this story because when I sat down with him, he said I sound like a used car salesman because I made it sound like it was going to be so easy. Like, oh, this would be easy. And the reason why it's because it was easy because I knew that the amount of work that I was willing to put in. And I knew how we could use the SBA to fit exactly what they needed from that perspective. And so that relationship actually is a relationship that introduced me to Elio. And then Elo's now introduced me to a couple people. And what Elo doesn't know is that by way of him sending me another introduction, there's another deal that we're working on that we're like fast tracking to get to closing because we're in competition with another bank. And, that's the beauty of what we do on the SBA side. And so I literally called up our director of SBA. I'm like, hey, I got this deal. They're talking to another bank. We got to do A, B, and C. We got to get this done in 2 weeks. You can't say no. And he didn't say no. He said, let's look at it. Let's take some look at it. And so it's in credit right now. It's with the underwriter, and hopefully we can get this thing turned and close in 2 weeks, which is, for those who are out there listening, SBA deals don't close in 2 weeks. That's not how the SBA works. But we've got a great back office team. We've got great partners inside and now an amazing leadership at Northwest. And when you put everybody together, everyone's on the same page and rowing that boat collectively, there's some great things that we can do. And the SBA allows us to do that.
And guess what? More deals gives you more power.
So
we need to empower Keith.
That's right.
We need to be an advocate on the inside, right? For the kind of things that we're seeing in the tech community. I mean, people are really out here struggling to raise capital. And if there's an option to go through a bank, and you could make that happen, one of the issues, we need to start more businesses faster. Mm-hmm. Right? We need the volume as the city grows, and what you're doing at the SBA is super impressive. So let's talk about, can I be a Debbie Downer for a second?
Sure.
Like you said, you make it sound too good.
I do, yeah.
Let's bring the people back down to earth, okay? Let's talk about some of the things that typically get in the way of lending. So poor credit history, right? What do you like to see from credit history? Personal balance sheets, like, how much other debt can somebody be carrying? Because you're still going to look on the personal side. What are some things that tend to get in the way of getting a deal closed?
Yeah, obviously credit is always king. Taking care of your credit, making sure that you got strong credit scores, no delinquencies, no charge-offs or anything like that. Obviously, if you had an SBA loan in the past and you've had some struggles with that SBA loan, those things can be issues. But again, Elio's trying to be Debbie Downer here and what have you. But what I can tell you is that communication is key, right? And I feel like I've got a story for pretty much every situation. But I had another client who had an SBA loan previously, and it was for a daycare, and that SBA loan didn't go well. And so he did a pay in kind, which means he paid off. They agreed on a dollar amount that would be paid off. And so they took a loss. He took a loss. No one made whole, but it was done, right? Well, there was still a portion of that wasn't paid, and we were trying to do another loan for him. So what we did is we said, hey, you've got equity in your home. You can pull a HELOC off of your house and pay that loan off, right? Or pay that pay in kind off to the SBA to get that cleared up. And because we're a preferred lender, we can then look into doing a new loan for you because now that's been cleared and it's been paid as agreed. A lot of other banks would not do that. They're like, oh, you got this on your credit. Oh, you messed up on an SBA loan once before. Can't do anything with you. I don't believe in that. I don't believe in operating that way. I believe that, there are some deals that are no. They are. But most of the times they're not no, they're not. It's just not right now. Or it's a not right now because you have to do A, B, and C. And if you're willing to do A, B, and C, then we can do C, D, and E. And a lot of times that's what's happened. I worked with a restaurant tour who it was a not right now. And I said, you got to get a new CPA and you have to do A, B, and C. And if you do A, B, and C, we can do this next restaurant for you. They went back and they did everything they're supposed to do. And we did that next restaurant. That next restaurant turned into 6 restaurants more later, all because they were willing to put in the work, get a new CPA, and do the things that they needed to do. We did all that through the SBA. So
next time, Keith, you're going to say, call Booking Street.
That's right.
Yeah.
That's right. Absolutely.
That's why we come to these things, right? So
absolutely.
We can put a name, not just a random CPA.
That's right. That's right.
Street. All right, big shout out to Booking Street.
Yeah, so interest rates on SBA are, they're variable interest rates. They're typically tied to prime. Prime is high right now. We all know prime is high. Prime shot up crazy from COVID. We'll never see those rates again, and they were really, really great. But all rates for SBA are tied to prime for the most part, at least the rates that we do. We do have some fixed rate products for commercial real estate that we'll do. But for the most part, all of our term loans or anything that we're doing on that side is going to be on a variable rate.
What's the average rate right now?
Average rate's going to be anywhere from 9.5% to 11.5%.
Better than a credit card.
Yeah,
And can you refinance on your loan?
absolutely. And there's no prepayment penalty. So you can refinance on that SBA loan to a conventional loan. So a lot of times what happens, depending upon what type of deal it is, you use that SBA loan to get you in the business, right? To get things going. You're going to pay that higher interest rate, but it allows you to get things moving, allows you to get ownership of that business. Then once you own that business and you've got, 2, 3, 4 years of tax returns that show like, hey, this is a successful business. We're doing extremely well. We don't really need the SBA anymore. A lot of times, a conventional, I can pass you off to call my conventional partner and say, hey, they're looking to refinance this loan. They want a fixed rate for 10 years, and maybe it's down to 6 or 7% or whatever by then. Who knows? And you do a fixed rate product from that side.
Any issues with taxes? You owe taxes, back taxes. This is entrepreneurship. People get in trouble with the IRS. How do you guys think about that?
Yeah, taxes. I mean, just got to make sure all that stuff is cleared up, because we will pull tax reports. We will pull, all those different UCC filings or anything like that. And so if you have any liens out there on your name or anything like that, all that stuff will be pulled. Again, paint me the picture up front. Good, bad, or ugly. Tell me everything. Oh, we had this problem or went through a divorce and my credit was this, or we lost our home and this and the other. Tell me the whole thing up front. Don't let me pull the information and then be surprised, because if I know the information up front, we can have a realistic conversation as to where to move from there. Or I can say, you know what, that's not that big of a deal for that issue that you have. We can tell the story as to what happened with that, and we can still move forward. But if I don't know and it's in credit, now I'm having to explain that to the underwriter after it's happened. Now I'm backpedaling instead of breaking on the past. So I'd rather be breaking and coming forward versus backpedaling and being in trouble.
Yeah, so say someone gets a $50,000 loan, they pay it off in good standing. Can they now come back to me like, can I get a $100,000 loan? Almost like a revolving line of credit?
Absolutely. So one of the things that, and I know people are listening to this all over the world, Elio, because you are blowing up, right? Global. Man, it's crazy. I don't even know. Do you have enough capacity for all
I'm
that?
trying. That's why I was wired.
Yeah. One of the things that we're doing at Northwest are cash flow forecasts for clients. And that allows us to do a cash flow forecast, allows us to do ultimately basically a working capital line of credit. So your company, you say, over the next 12 months, in order for me to make this revenue, I need to have this much access to capital. And this is why, and this is how it's going to impact my cash flow analysis throughout that 12 months. If we're able to make those numbers work to where the cash flow at the end of the 12 months turns out to a good space, we can put together a working capital line of credit for you to pull and access and draw on. And so we've done a couple of those. I've done one as large as 1.25 million for a tech company who, again, no collateral or anything, like literally computers, engineers, and him, salespeople. And I mean, it's taken his business to the next level, right? Now, he had a strong business that produced strong cash flow. He had a good balance sheet. I think his business was doing $1.2 million or such. But I think in 2024, he's going to do like almost $4 million, right? Because now we have access to capital. And I think that's one thing that business owners have always struggled with. And whenever I talk to a business owner, they're like, oh, I only need this, or I only need $200,000. I'm not going to need this, that, and the other. Yes, you are. You just don't know that you're going to need it because you've never been in that position before. And I always say it's better to have it and not need it than to need it and not have it.
So many people in our community are obsessed with starting their own thing from scratch. You work a lot with business brokers. Let's talk about the graying of America just doesn't mean a whole bunch of people on Medicare. It also means a whole bunch of business owners trying to sell businesses. Let's talk about using SBA to acquire existing successful businesses where we all don't have to feel like, because most people's kids don't want to do what their parents did.
Yeah.
Right? So there's all these people turning 65 want to retire with a CPA firm or a laundry or dry cleaners, and they need to sell it.
Daycare,
Talk
whatever.
about how a good, shrewd entrepreneur needs to be up on game when it comes to acquiring existing businesses or franchises.
Yeah, that's a great segue, Elio, and I'm glad that you mentioned that, because on April 9th, we're going to be hosting at Northwest a brokers and buyers symposium, where we're bringing in a bunch of brokers from the OBBA, Ohio Business Broker Association, in to speak about some of the things that they're doing, some of their goals for 2024, some of the businesses that they're representing right now that they're selling. And then we'll have a lunch time where we'll bring in buyers as well and let those buyers mingle and network with those brokers and find out who's selling what and who's got what out there and what that looks like and what if it fits and if it works. I got a guy that is currently in corporate America, sits as in a high ranking position. And he's going to leave that opportunity to go, and he's buying 6 urgent cares. All right, corporate America, sit behind a desk, punching buttons, and now he's going to own 6 urgent cares because he hooked up with a business broker. Business broker said, I want to look at deals that have this much cash flow on them, and it's been averaging this for this many years, this and the other, and that's what they kind of came up with, and then they found this opportunity. And so, if you're looking for a business, I can get you in contact with some of the top brokers here in Columbus, or brokers on the national side that if you're looking to buy businesses elsewhere. But, most of the business that I do either comes from word of mouth from other clients or from brokers that I work with over the years. And so getting in contact with a strong business broker positions you to be able to find out about a multitude of other businesses that you would never be thinking about, right? So if you want to buy a doggy daycare business, or you're not even thinking about buying a doggy daycare business, you say, I want to talk to this broker and this and the other, and then he says, well, you know what? I'm selling this doggy daycare business. We're like, really? You're like, well, yeah, it kicks off $900,000 in cash flow. Oh, really? Well, that sounds like an interesting opportunity. Let's tell me more. Yeah, tell me more, right? So, there's all those different type of opportunities that are out there that we just don't think about all the time because we get, I don't want to say stuck, but we get focused on this one niche where we think that this is where we have to be and this is what we have to do from a business perspective, and not understanding that there are all these other business opportunities that are out there and businesses that are for sale that are doing extremely well and kicking off great cash flow. It's just a matter of getting connected with the right people and finding out more information about that. And then a lot of times what we're doing with those brokers is we are, I don't want to say pre-approving, but pre-approving those deals. So one of the brokers, he'll send me 5 deals and say, hey, Keith, take a look at these deals and you tell me if you would approve these deals if I had an A or a B buyer. I'll look at those deals. We're running through a cash flow analysis. I say, yep, we would approve any A or B buyer for every last one of those, right? And then I'll sit down with the buyer and I'll do a cash flow analysis with him and say, hey, you're an A or B buyer. So now I've cut out the timing of it. And they say, hey, I'm looking for a business. Well, I've got these 5 businesses that I've already talked to this broker for, and we've already pre-approved those for A or B buyer. You're an A buyer. So maybe you take a look at these 5 opportunities and see if they work. So
what if you're structured as like, an LLC, but then underneath the LLC, you have, DBAs, you're doing business as.
Mm-hmm.
Can you structure the loan for the LLC, and then that person, let's just say, to doing business as.
Yeah.
Let's say I get $50,000.
Mm-hmm.
Don't get excited. Or 100,000.
Or, yeah.
Can I use some of it over here? Can I use some of it over there? Or is the deal really structured around, we focus on one versus two or combined revenue projection?
Well, I think what I would say is we would sit down and say, okay, what's your 36, 60-month plan, right? What's the goal for the next 3 to 5 years? And let's back into what you really need from a line of credit perspective to be able to grow both of your businesses, whether as they fall up under this one umbrella, right? And if both of those businesses, if all of the revenue reports to that one LLC, and that's the only tax return that actually generates revenue, then we can do something for that LLC, okay? But I think that it's important to understand that, I like to get my clients to think past what's right in front of them in the moment, right? What does this look like in 3 years? What does this look like in 5 years? And this is going to be enough to get you to that point. Not to say that you can always come back and get more, always. But I want you thinking and planning, because I'm giving you the keys to what underwriting wants to see as well. They want to see you thinking 3-5 years down the road. And so they know that, hey, if I'm going to give them this 10-year loan, they've already thought 5 years into this. They've already planned for at least 5 years into this. So that way it gives you a leg up on getting that approval.
And is the line of credit, do you only pay it back if you use it?
Yep.
So it's like
Yeah. So you only pay on what you borrow from it. So if it sits stagnant for too long, though, we'll close it up. But I mean,
is there a penalty to that?
no penalty. And really, it's we want it revolving, and also we don't want it to be for there to be embedded debt on there either. So if you come to me and say, hey, Keith, I need a line of credit because I want to do this and that line of credit should really revolve on a 12-month annual basis. If you need to buy like equipment, like, red cameras and everything else that are $30,000 a pop and this and the other, I wouldn't put that on a line of credit. I give you a term loan to buy those red cameras and the networking and all that stuff that you need so that way it doesn't get embedded on your line of credit. So now, because you're going to be paying interest only plus some principal, you're not going to be making $30,000 payments towards your line of credit. So give you a term loan for like physical assets that you're going to need that you can bring into your business, and then use your revolving line of credit for revolving matters.
Okay, Keith. Any other questions for Keith? Okay, go ahead.
Yeah.
You said a buzzword, interest only. Is that what your loans are, or?
So on lines of credit, the payment that's required is an interest-only payment. Now, when you do a larger loan and a term loan, a lot of times what we can do is we can give you a certain amount of months of interest-only payments. And so that typically varies depending upon the business, upon type of cash flow that it's kicking off, if it's a startup, if it's established, if you're new to the space and all those different things. But I like to always add at least 6 months of interest only, just to give the customer and the new business owner the time to get comfortable in that business, especially if they've made a business acquisition, even if it's kicking off great cash flow. Save that cash. Cash is king, pad those stats in there. So that way, when it's time for you to make that principal and interest payment, you got more than enough capital to do so.
Good. All right, everybody go crazy for Keith right now. That's a lot of anything else you want to cover that you didn't cover?
No, I would just say that, again, the SBA is an amazing tool to have to, at this point in time in where we are and things. There are the baby boomers are on their way out. And so a lot of them own businesses, have small businesses. They're meeting with business brokers on a daily basis. There are more businesses in the market that are for sale or going to be for sale than we've ever seen, at least that I've ever seen. I'm not that old, but that I've ever seen in our time, right? Get out there. If you're interested in being an entrepreneur and you want to find out about business ownership, get out there. Let me know. I'll set you up with a couple practice brokers. I'd be more than happy to invite you to our broker and buyer symposium so you can come and meet some of those brokers, hear from our senior leadership team in the bank and find out how we do things. And really take that chance to put yourself out there, because there are some great opportunities for you. If you own a business, there's capital for you, right? There's capital that can be provided to you to help you grow that business. We've just got to put together that business plan, understand those projections, and really go to put something together that makes sense for us to get it done, because we are trying to say yes. We want to say yes. And with the new changes in the SOP and where we are, especially at Northwest, we want to be able to say yes all the time, as much of the time as we can. And I'm going to always push and stretch our team on the inside to say yes. So, and like I said, I'm always willing to work backwards for that slow yes instead of giving you that fast no. So.
All right, so in closing, man, I'm just going through some of the projects that you guys have funded, and it's getting me excited. You funded $680,000 for a convenience store owner to buy the strip plaza that they were in. You get 1.2 to acquire an IT consulting firm plus $250,000 SBA line of credit. So they're out there doing deals for real entrepreneurs. It's not like, oh, Keith is out there lending to what, like Riker,
Right.
Mega Mall, right?
Yeah.
It's the convenience store owner. It's the dry cleaners. It's people like you in this room. So
it's a dump truck owner, right? Someone who comes in and says, hey, I want to buy a dump truck. And so we finance it. And then they come back and say, guess what? We just landed one of the largest contracts we ever landed, and we need 4 more dump trucks. Okay, let's do them, right? Or, someone's buying a doggy daycare, or someone wants to build a new building for their business so they can grow and bring in the people that they need to bring in from an infrastructure perspective. Or like the gentleman I spoke to you about that had the cloud kitchen that are now going to have 2 brick and mortar dine-in locations that will have an extensive menu, provide liquor, beer, wine, things of that nature. So the small business, it's SBA, small business for a reason, right? So yeah.
Appreciate you, man.
Yeah.
All right, we're gonna hang out. We're gonna network. We're gonna get to know each other. You're gonna have names of CPAs and names of law firms and names of consultants, and you're probably gonna fund the movie at the end of this. So thank you so much, Keith.
Let's do it. As long as my kids get to be in the movie, we're good.
Okay, there we go.
I'll see if there's that creative.